Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So we do have a new weekly candle now. I thought it would be prudent to provide an update on where the 20-week SMA and the 21-week EMA are right now. As of today, June 4th, the 20-week is coming in at $26,259. The 21-week EMA is at $25,943. So again, I mean, you're essentially looking at around 26K is more or less the line in the sand, right? Now we've talked about this a lot, and the reason is because if Bitcoin fails to hold this like it did in 2019, then you ultimately get that secondary fade into the back half of the year. If you remember, it was in 2019 where we rallied for basically the first 6 months and then faded it until early of the halving year, right? Now it's interesting because we're very similar thing has played out so far, right? We've gone up at least until April so far. We've talked about, two likely outcomes. The two most likely outcomes, of course, are that it just fades from April. And then, of course, the other one, we've suggested that, it's possible that Bitcoin could get one last renewed push in June, although I do still tend to lean in the direction of April marking that local high. Again, interestingly enough, if you look at the daily time frame, we're still looking at that being April 14th, which coincidentally is the same day that marked the high in 2021. Also coming off the same idea of, a January high, a February high, a March high, and then the April, high before you had the summer lull. Same thing right here, right? Like you have the January move, the February high, the March high, the April high, and then this May was just a lower high in 2021. And, the question, of course, is this just the lower high in 2023? And I do put forth the idea that it could be. And I know this doesn't necessarily get a lot of great feedback because I know a lot of people want prices to move higher in the summer. And I think it's worthwhile to leave open the possibility that June could show some renewed strength, but that's sort of, in my opinion, that's more of like a secondary case. And the reason why it should be allowed to have some merit is because the dominance still is below 49%. Now, I would argue that the dominance could go above 49% even on a Bitcoin dump at this point, because we know that when Bitcoin goes below the 20-week SMA, that Bitcoin USD, when Bitcoin goes below the 20-week SMA, that the Bitcoin dominance tends to go up over longer periods of time. If you remember back in 2022, this rally here by the dominance was when Bitcoin USD was going down. So if Bitcoin, and it was below the 20-week moving average, right? So if Bitcoin goes below the 20-week, I would still say that the dominance could break the range high. The reason I'm not super confident about it, whether it's a rally or a dump that it occurs on, is in 2018 and 2019, it was a rally of Bitcoin USD that broke the range high. Do note though that in 2018 when it occurred, the rally that broke the range high on the dominance was actually a slightly lower high as compared to where it was like a week or something before. So it didn't even necessarily mean a new high. It was just a little bit of renewed strength, not because the market was fundamentally bullish, but more so because liquidity was leaving the altcoin market and going to Bitcoin. And there was a sufficient amount of liquidity to support Bitcoin USD for a while longer, right? And same thing in 2019. I mean, again, a lot of people say, well, you should compare it to 2019, but it's a very similar thing, right? Like there was a range high on the dominance. And once Bitcoin dominance broke the range high, that was what marked the top on Bitcoin USD. So I do think there's at least some reason to be open-minded to some renewed strength. But I would argue that there's a high probability that the local highs are in, or even the yearly high could be in for this year. And if it's not the yearly high, I would expect the yearly high would only be a few $1,000s higher. But anyways, one of the things we talked about, of course, is that we did get this cross here on the 20-week SMA and the 21-week EMA. And if you remember, we got the cross here in 2019 as well, right? And so after this point in 2019, after the cross, which arguably we should be comparing to the pre-halving year, Bitcoin USD just faded for a few weeks and then capitulated down below the 20-week SMA. So there's a chance that the same thing is playing out, right? There certainly is a chance that the same thing is playing out. Furthermore, we also spoke about the 100-day moving average, right? An important thing to continue to talk about, because it was in 2019 that we got those daily closes below the 100-day moving average in a more sustained way, right? Like we dropped below it, we got the rally back up, we got below it again, got one or two more daily closes above it, and then we just faded down, right? So far in 2019, what are you seeing? We had that daily close below, went back up, back below it, slightly back above it just for another couple days or so. And now we find ourselves back below it again. The 100-day SMA now is above 27K. It's $27,028. We just had a daily close above it, technically speaking, but at least right now, it could turn into be just a wick. But right now, we are in fact back below the 100-day moving average. So I think we do need to be on alert here that this could be a potential fade by Bitcoin. And I mean, I know some people are hoping that it just gets some type of renewed strength like we saw back in March. But remember, this was on the back of the sort of the not QE. And unless you see something drastic like that, then there is I would say, a good chance it could just sort of follow the ghost of 2019. And so let's keep an eye on the 100-day moving average and price action with respect to the 100-day moving average. Additionally, more importantly, is the 20-week SMA. I mean, if we get a weekly close below 26K, then that would be relatively bearish, especially if we get like confirmation, the following week, right? If you go below it and then just continue to put weekly candles below the 20-week like we did back over here in 2019, then that's of course not a great sign. Even remember in 2019 and early 2020, we rallied into a recession, right? We rallied into a recession. And then we got that, major capitulation. So that is a possibility, right? You can see markets rally into a recession. We've talked a lot about how a recession has not yet occurred over the last 18 months. I don't count 2 consecutive quarters of negative GDP to be sufficient to argue a recession. But if the unemployment rate continues to go up as it recently did, then you are looking at potentially a recession. And then that could also be, of course, the narrative to accompany a potential fade by Bitcoin USD in the second half of the year, maybe even into early next year, accompanied by a potential pivot by the Fed. Hopefully, that would be somewhat timely in correspondence with the Bitcoin halving. So do remember that the pre-halving years for Bitcoin tend to be they tend to just be sideways for the most part. Doesn't mean you can't get some rallies, but in the end, no one seems to really care. It's just more or less a sideways year. In the early part of the year, there's a lot of hype, as usual, because you're coming off the back of the primary bear market year, and there's still a lot of people that are around. They're curious as to what's going on. But even though sometimes you get those moves to the upside, people just don't seem to care anymore because the altcoin market isn't moving nearly as quickly as what they were used to back during the post-halving year, right? So then people stop caring. And then we ultimately see that fade in the second half of the year. And of course, you're always going to have the group that calls for new highs in the pre-halving year. We had the same thing occur over here. And it's sort of like these mental gymnastics, right? Of everyone saying, well, now that no one's expecting it, it's going to happen. Guys, I mean, look, anything can happen. But in 2019, do you really think no one was calling for new highs? I mean, even then, I think a lot of people thought it was going to take longer, but there still were a few people back then saying, oh, no one thinks we're going to new highs, therefore it's going to happen. And then look what happened, right? We just faded the second half of the year. In 2015, it was somewhat similar, but the market was a bit more dead. We didn't really get a 4x rally. We got like an 80 to 90% rally by Bitcoin USD, faded it, got another rally again, faded that, double bottom, and then we went up. Right, and it took a long time to really get that interest back in the cryptoverse. 2019, it was a rally. Some people called for new highs, right? Because again, no one's expecting it. Still faded the second half of the year. Okay, just because no one's expecting it doesn't mean it has to happen, right? I mean, no one's expecting the S&P to hit, 20,000 this year, right? It doesn't mean it's going to happen just because no one's expecting it. Okay, so I mean, there are of course some counterpoints to the idea of no one's expecting it. I mean, it's possible I eat my words, right? And later this year something crazy happens. But again, it is sort of a similar trap as I saw last time in 2019, where there's a few people that kind of say, hey, no one's expecting it to go to a new high, therefore it's going to happen. Um, didn't work back then in 2019. Could it work this time? Probably not. Is there a chance? There's a chance of anything happening, right? There's a chance of anything happening. For all we know, the Fed prints another $6 trillion later this year, and then we put on our rally caps. But that's probably not the most likely outcome, and so I think it's better to have a more level-headed view of the market. So it kind of seems like we're just sort of fading into the 20-week, like in 2019, just like a slow fade. You kind of get close to it. You get one green candle back up, and then you just get two more red candles back down. We're potentially looking at that right here. Just to sort of zoom in here, just so you're aware of what happened. You had three reds in a row, a green back up, and then two more reds, and then it was the following week that saw capitulation. So three reds, a green, and then two reds to capitulation. Here it was three reds, a green, two reds. And if it plays out like 2019, this would also close the week red, and then it would be next week that would see some type of move to the downside. That's, of course, if it's already in this phase. A glass half full kind of person would say, well, why can't we still get the June rally, right? Because in 2019, we did get a June rally that ultimately took out the prior high from May. Okay, so you could argue that. The counterpoint to that, though, is that this bottom here occurred in December. This one occurred in November. The halving this time is also going to be pushed forward a month, as compared to at least a month, I believe, as compared to last cycle. So you could argue that we're a little bit further on in terms of it. And also that even the peak, this was November, this was December, right? So you had December, then June, then you have November. I guess May would actually follow the most, but actually so far it has just been April. So anyways, that's where we are this week. Hopefully you guys enjoy the content. Make sure you subscribe if you're not subscribed. Give the video a thumbs up, and I'll see you guys next time. Bye.